Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 19th day of March, 2015, and this is the daily report for gold and silver. After the dramatic day we had yesterday in the market, we've got follow through in the precious metals markets, up slightly higher, currently trading in gold up about, call it $3 on the day, $11.70 and change. It has had a low of $11.59.60 and a high of $11.73 on the day. Silver also trading higher on the day, and it's actually the most stellar in terms of performance today. Up about 22 cents on the day, 16.13, that's a current print on the screen. Low 15.81, high 16.18. Now, we did issue a buy recommendation on both gold and silver just prior to recording this show. The reason for the actual trigger was multiple, but a candlestick pattern that had been identified yesterday in both markets was the engulfing bullish pattern. It's a two-day candlestick pattern. Here in silver, you can see it. It's simply in which you have a green-bodied candle totally engulf the prior trading range of the body of the prior day. This, of course, being a daily chart. So we did enter the market from the long side, right in this area, 16.13, and in terms of stop placement, our recommendation, we're putting it below the lows of both gold and silver since we have our silver chart up. As I said, the low is 81. Our recommendation is to place your stop below 15.75. So it's a very tight stop, but if this market continues to rise, we'll be able to grab it. If not, we're going to limit the risk to a very tolerable level on this particular trade. Again, a buy signal in both gold and silver. So traders, we talked about silver a little bit in terms of the trade alert, and I wanted to follow up on the gold trade alert. We issued buy signals in both gold and silver, and there's a couple of things that precipitated this call. We talked about the engulfing bullish pattern that we identified in both markets, and there's absolutely no doubt. Let me go ahead and try to blow this up just a little bit. You can see the same kind of activity that we just looked at in silver in gold with this engulfing bullish right here. Now our confirming candle, which is our green candle, is nowhere near as strong as the candle that we received in the silver market. As I said, silver's up about 1.22%. Gold is up about 0.25%, so a big difference in there. But there was another thing that really caused me to take a serious look at this market from the long side. One, obviously, the dramatic day that we had yesterday, and realize that that day yesterday was pretty much all dollar driven. And when we go back and look at our daily chart on the US dollar, you can see that that is recouped quite a bit and is back at around 99.50. But there's another thing that really caught my eye as we were charting the markets, and that is the MACD, moving average convergence divergence, and that's what you see on this lower 1/3 quadrant of this particular chart. The MACD, of course, is this particular set of lines right here. And what we look for in the MACD is whether they're moving apart or moving together, and what we use as a trigger is when they actually go and cross. And you can see that these lines here are actually coming very close together, and it does appear at least that we should get some sort of cross up here. You can see this lower line like that, and that's really the other thing that precipitated this actual signal. Now, if we look back historically where they cross right in here for the sell and right in here for the buy, you can see that they will, because they're averages, they're always going to slightly lag behind. You can see market comes up and then you get this top right here, but you get the lines crossing back again. So you can get a pretty solid indication if you use candlesticks in conjunction with the MACD, and you get a buy signal in candlesticks and a buy signal in the MACD. Now, we haven't crossed yet in the MACD, but realize that they're always going to lag a little bit behind because of the fact that they're moving averages, so that they have to be a lagging indicator. So whereas you get your top right in here, your sell doesn't come, till a little bit later, buy right in here, and the market has already moved up a little bit. And so for that reason, it's going to lag behind. Market currently trading, as I said, roughly at 1171 and change. We're in at 1170. Now, in terms of stop, just like in silver, I'm keeping it really tight because the only other option is to put it below the previous daily low, and that's just too much risk in terms of the market. If it's backing off that much, it's already turned around, and we've got a scenario like we had here where we had a fake out, or even here where we had a fake out. So we are long this market, very, very tight stop. The stop itself is below 1160, so the risk on it is literally about call it $11 to $13 on the trade. But if we get a bounce in terms of my upside target, I really believe that we have the opportunity for this market to move roughly at the highest level I would look for would be this point right here, which is roughly 1220. I think we could see a move to there. If we do get follow through, obviously we've got to take out this resistance level here, which is sitting at 1175. That's the first real goal that we have. And then secondly, we've got to take out this century mark at 1200. So traders, if you recall from yesterday's market activity, we had the dollar literally fall out of bed. This is our daily dollar chart, and this is yesterday's trading activity going down to 95. You can see this dramatic fall. So when we looked at the net gain of gold yesterday, we had a market where actual normal trading, meaning buyers coming into the market, was actually unchanged to a negative $2, and the $20 rise that we saw in the market was simply due to the fact that the dollar was weakening, or dollar weakness, as you can see right here. Today, we're getting exactly the opposite. Let's take a look at the Kitco Gold Index. And traders, I've done just that. I've actually gone ahead and put up the index because we've got the opposite today. Take a look at gold. So we've got the dollar strengthening, and that strengthening of the dollar is actually taking away $19 in value in terms of a dollar strength, really negating or taking away. But then take a look at normal trading. You're actually up about $23 in gold right now, and that's where we're getting this net change of about $4, $3 to $4 on the day at 1171. This is all buying coming into the market. Look at that buying. It's exactly the opposite of what we saw yesterday, in which it was dollar weakness really hampering any kind of real gains, or exhibiting or giving it the gains, and we're getting the exact opposite on today's market. So when you consider the move that we're seeing right now in gold, as I said, up about $3-4 on the day, the truth of the matter is buying has propelled it a lot higher. It's a strong dollar that is keeping the net gain on the day away from being double digits, which in fact it is. In terms of the other markets that we have been following, crude oil continues to drop, now back to that 43. Now, most interesting is the fact that the supply continues to grow, demand is stagnant, and we do see this market under consistent pressure. There's a real good chance it will go back near these lows at around $40 per barrel. Now, when we look at the equities markets, we had that tremendous rally the other day, but there was really no follow through, as we had the Dow Jones Industrial down again today. This is the volatility index, and you can see the volatility has also dropped on this daily chart. Which brings us to the Standard & Poor's, this being the E-mini S&P 500 E-mini, and there's no doubt we got some resistance right in here, right at around 2100. That's where the market came up to yesterday and started to move back down. So we do have gold and silver trading higher, although they're being kind of, it's the proverbial salmon swimming upstream. This net gain of $3-4 is really a net gain of double digits, but it's being tampered or hindered, I should say, by the absolute steamrolling dollar, which is moving higher. We expect that the dollar will continue to move higher, but my sense is right now, even if we're still in a bearish market in the precious metals, I'm looking for some sort of a bounce here to the upside. And I really believe that since it's fallen, and realize that it's fallen from just above 1,300 per ounce, I believe that we're really looking at an oversold scenario. Even if it's still a bearish scenario, we should see some sort of a bounce at this point. Maintain your current positions, maintain your current stops. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.